Hey, what's up YouTube? It's Sam with the Humble Outliers, and today's video is on M1 Finance versus Fundrise. This is a 1 month comparison so far with Fundrise. This video is not meant to be for a comparison directly in regards to the performance, more so just so the benefits and the features of both programs and showing these two strategies of how to invest, whether it's through REITs that are commonly found in the stock market or REITs found in the private sector real estate. But before we start, please smash that like button down below for the YouTube algorithm. And please subscribe if you haven't already. It's always hard for the little guys, so any support you can show, I greatly appreciate it. And just to remember to quickly do your own research when doing stock picking or investing. This is meant to be for entertainment purposes and for me to share my investment journey. And hopefully you find some value out of it and use it into your strategy or figure out ways that you want to incorporate your own strategy into it. All right, so what you are seeing here is from my M1 Finance portfolio. This is a pie within my, or sector within my growth portfolio, and it's called property REITs. So I've picked stocks already, and these are stocks that are found commonly in the stock market, and these are popular REITs that many of you have probably heard of or haven't heard of yet, but some of them include Digital Realty Trust. There's also Realty Income Corporation here, as well as Simon Property Group. So I created this pie because I wanted to create a way to invest in REITs and also be able to collect the dividends earned from that as well as any appreciation. So what's nice about investing through REITs through M1 Finance is the fact that it's done through fractional shares. So with fractional shares, as you know, or maybe if you haven't been aware of yet, it's a way to allocate money as a percentage. And this is a way for you to buy fractional portions of a stock. Instead of paying, let's say $200 for one share, you can just put $10 towards it. And it's a way for you still to participate, collect the dividends, and also gain appreciation from it. And also what's nice about using M1 Finance is, again, you can pick your own stocks. So you're able to have freedom into what you're investing your money into. If a stock is underperforming, or if there's a sector that you want to get out of, let's say it's the home retirement sector, you can always just quickly liquidate that stock and adjust your stocks accordingly. Another thing maybe you can do is with what's going on right now with the REITs in the malls, you can always just downgrade that or change your allocation. So with Simon Property Group, I've adjusted that down to just 1%. This sector is getting hurt really bad with what's going on. Also, it doesn't take much money to invest with M1 Finance. So when you are investing, it just takes maybe as $1 to start buying shares, or $10 even. So it's just a way for you to quickly invest very slowly. You don't have to put a ton of cash in right away. Gets you some exposure, gets you a chance to learn. And another thing that negative about M1 Finance is that it's tied to the stock market. So all the volatility you can see right now, this sector is down 21%. So with it being tied to the stock market, you're kind of riding that wave of what's going on in the markets. And there's a lot of things that can impact that, as you know, with the rental markets, the market in general, how healthy things are going on with the investment markets. So you're a lot more volatile into that space. Another thing that I don't like about M1 Finance is that the fact that the buy window is only allocated to in the morning, only at 7 a.m. So it doesn't give you much control in regards to when you want to buy. You kind of just have to allocate it, and then it will trigger that next morning. And this is for free members. So unless you are a premium member, then you would get 2 windows. So you get an afternoon window as well. But I think most of the members who use M1 Finance is probably under the free side, because the membership side can be kind of costly if you don't use other options or features along with M1 Finance. They do have the spend feature where you can have a checking account, or the borrow feature, but I think most people just use it for diversification. So in that regards, it's a bummer that you can only buy once a window at 7 a.m. So if you caught it at 10 a.m. that morning, you wouldn't be able to trigger that order until the following day. And then with that, you don't know what the prices are going to look like that next morning. So it's kind of a tough gamble there. And what's nice is that it does have an auto invest feature. Same thing with Fundrise. And with here, you can set, how much you want to auto invest. You can toggle that based on the minimum cash balance. You can put it at, $50 every couple weeks. So you can change that frequency. You can have money automatically deposited in from your bank account, and that'll automatically trigger a investment in the next window. All right, so let's go ahead and look at Fundrise, and let's go see what the pros and cons are over there. All right, so for Fundrise, let's go ahead and look at just a brief description of what it is so you can get a quick idea about it. So Fundrise, their whole approach is to give people exposure to the real estate market. If you are unable to, purchase real estate as a whole, like the properties out there, because of where you live, the prices can be, very high. So this is a way for basically portfolio diversification. They're showing that the hypothetical usually is typically stocks, and then it's a percentage of bonds. So what they're looking at is now you can add, real estate into your portfolio from a private market sector. So with it, what they're looking to promise is, access to true investment classes, reliable performance models, expert management teams, diversification of products. So you can see where these products are taking place. You can look them up directly. They're real projects out there. They show you, from a detailed perspective, will show you, how much money they need to raise for that specific project. So they give you kind of a description of what the performance looks like in regards to the public market versus a private market. What's nice about the stocks is, it can be liquid. You can get rid of it within a day. Typically, with these private markets, you're looking at more of a longer investment horizon, 3 to 7 years typically. The trailing 20-year annual return is 8.2% of the stock market, as opposed to the private markets of real estate, which could be 12.3%. Then it shows something here, which it says, and what it shows here is that the cost of auction liquidity costs you 33% of your return, whether you use it or not. So here are some common investment portfolios that they have set up. For their lowest plan, it requires a $500 minimum, which is their star portfolio. It's what they call their most popular. The plan that I chose was the long-term plan, which is showing that it gives you more appreciation. You can see here how they kind of depicted it. So you get more appreciation returns longer term. They do have one that's more balanced. So you get equal dividends, equal appreciation. And here it's showing you a hypothetical what that would look like in your returns. For over let's see if you did it over a 10-year horizon of a $10,000 deposit or investment. You can see it's $25,000 here. Annual return 8.6 to 10.7. The supplemental, which is more of a heavy appreciation model, 7.9, 8.6. And the long-term model, which is what I'm doing, which is 9.3 to 12.8% appreciation. Gives you kind of a horizon there. So here is my portfolio. I went with the long-term growth portfolio that they had, which was aiming for higher appreciation over the long term. You can see here that I've started since April 23rd. It's currently at 1,085 cents. So it hasn't been performing that well so far for the 1 month. You can see that they're showing you the advisory fees with that, what you've gained or lost with appreciation. So right now the appreciation is down. Gives you the dividends. So this is the performance tab. It'll show you once you have more data. You need at least 1/4 of data completed so they can populate these data returns for this slide. But it shows you what that would look like there. And here is how the portfolio is allocated. You can see that they've got it set up from a growth, balance, growth, West Coast market, East Coast market, and the percentage of allocation there. So these are the real projects that they're working on with Fundrise. So you're investing in real properties in the private sector. And you can see here, if you were to click on, let's say, this Los Angeles market, shows it's got a rating B. The commitment for this project is $16 million, set up as an equity play. Projected return is 10.8 to 15.3%. If you click this link here, it'll go into more of a detailed look at it. You can see the map and where it's located within Los Angeles. It gives you kind of a description of what that location is looking like, the portfolio, the commitment of investments, and the expected returns or projected returns. Something to note also is that Fundrise does also offer drip investment, so you can put your dividends right back into the investment portfolio. Also, you can auto invest just like M1 Finance. You can set up your frequency. All right, so that'll wrap up the video. This is just showing you a quick comparison between the two. You can get an idea of what it looks like once you've created an account, you've started your investments. For the short-term perspective right now, it's looking like it's lagging quite a bit. Again, with the market being down as a whole, it's kind of hard to say, if it's Fundrise's fault. But with the market being down, people being unemployed, that can impact the markets, and especially with the real estate sector as well. But this is just a short-term look. It's not meant to be for the comparison of how the REITs in my M1 or in this one is performing as a dollar per se. It's just more so right now looking at what these two options are for investing and how you can use that or incorporate that into your own investing approach. But give me a thumbs up. Let me know what you think about the video or what you think of these two investment styles. If you're currently investing in one of them, let me know how your feedback has been or your experience has been. Thanks again. Talk to you all soon. Take care, guys. Bye.